Good evening, everyone. Welcome to our second webinar on the Survival and Stimulus Business Guide to the Corona Crisis. For those that don't know me, my name's David Evers. I'm the Managing Director here at AdviceCo, and I'll be one of your presenters tonight. I'd also like to formally introduce my fellow presenter this evening, Steve Walker. He's again a principal here at AdviceCo, and he's our in-house stimulus expert. We couldn't have stayed on top with all the huge amounts of volume of information that's been coming without Steve's support and his expertise in what clearly is a really challenging environment out there at present. And he's been invaluable helping our clients and our team stay on top of where we're up to in this new world. Thank you for attending here tonight. We do have some registrations from people who are with us for a second time, so thank you for that. Again, congratulations. Just by being here tonight means you've taken a very positive step to help improve your financial position and to get through this crisis. For those that aren't already working with us, following tonight, you'll have the opportunity to work with one of our experts and see how some of the strategies that we've found that are working with clients at present can apply to your own circumstance. So you do have the opportunity to be better off yourself. And so a little bit more on that following tonight's presentation. So we are truly living in extraordinary times. We've seen significant numbers of businesses that have been forced to close their doors. Other businesses who may still be operating but have had their supply chain interrupted or perhaps unable to conduct the business the way they once were. And basically, on top of all of this, we still have the significant health threat, which is worrying basically small business operators as well as their teams and their families. Health stats have been more positive in the last few days, but nevertheless, there is still that crisis that underpins the fear that's actually out there in the wider community. So I say again that these truly are extraordinary times, and that's the fundamental reason for the packages that have been announced. And overnight we also had some further information come from the ATO, but Steve will give us a little bit more about that later. So it's clear to say that every business will be significantly impacted. And so the need to truly understand this environment and what we're now finding ourselves with and finding strategies to act decisively and change and improve your business in this environment is basically absolutely required. And we are in that environment where we do need to make improvements. And we're having a little bit of a track there. So the host tonight, as you say, myself, David Evers. I'm Managing Director here at AdviceCo. I've been working with small businesses, both in the management consulting area and financial planning for too long than I care to remember, basically since 1986. Steve is basically a chartered accountant as well. He's been operating in the profession since 1985, is also a registered company auditor, so absolutely understands the application of laws and how that's best applied to small and medium-sized business. And that's the reason, effectively, Steve is our expert inside our organisation on these stimulus packages. Now, tonight is not about us, it's about you. But I do want to take a few moments just to reflect on AdviceCo, and other than to say that, or one thing to say is that we do provide a complete advice solution for our clients. We've been running presentations and providing information to small business operators and financial services investors in business improvement strategies for well over a decade. However, this is only our second webinar, so we too have been forced to adapt and change in this new environment. We do have over 50 attendees tonight, so we're hoping Zoom holds up for us. It has, and we were successful in our last presentation. We did have some sound issues, so hopefully they're improving for you. We do want these presentations to be as interactive as we possibly can. So I'll be monitoring questions, and we will deal with your questions as and when they come through. at an appropriate point. If we don't manage to get to your question, please we won't lose sight of that. We will come back to you following tonight's presentation, and you will have the opportunity again to sit down one-on-one with our experts to deal with any specific questions that you may have that apply to your own personal circumstances. So bear with us if we do happen, if we don't get to your questions. I do anticipate tonight the timeline with the announcements that have just come out from the ATO that we may run over. I'll try and keep the presentation to the hour, but it may well be that we do overrun for 10 minutes. If you run out of time, we will have the presentation that will be on our website available later tonight for your own download if you do have to leave it at exactly on 6:30. So what brings us here? So we're going to cover 10 particular stimulus measures. They relate to the Jobkeeper Payments. Tenancy legislation has been big updates in the since our last webinar last week on both of those areas. Wage subsidies, payroll tax, BAS discounts, instant asset write-offs, depreciation increases, fee waivers, and again, there's still announcements coming on those almost daily. Loan support, interest rate relief, and the small business grant. So I do suggest, as we're going through this presentation, as we're getting general information being presented by Steve, that you do keep in the back of your mind what strategies that you could be applying in each one of these areas to your own business. The question you should be asking yourself is, what strategy can I implement in my own business to get through this tough period and be in a better position from where I am today? So, Steve, first port of call we're going to cover off tonight is the Jobkeeper Payments. This is the reason I think we will have some extra questions that do come in tonight. So again, you can use the question and answer button on the bottom of Zoom there, which will allow you to actually get those questions. Enough from me, Steve. Why don't you give us a heads up as to where the Jobkeeper payment system's up to, incorporating the update we had last night from the ATO.
Okay. Thanks, David. The Jobkeeper, I'll just give a quick recap of where the Jobkeeper stands. You'll see, for those of you who were here last week, you will see there's been slight changes to our slides to reflect changes that have come through over the last week. Jobkeeper, what is it? It's a $1,500 a fortnight per employee payment by the government to preserve employment. Now, this is payable in arrears. It's payable for any business which stays active and experiences a downturn of more than 30%. There are some exceptions for really large businesses, but I don't propose to address those tonight. Or in the case of a charity, the downturn is 15%. Charities, the downturn includes tax deductible donations, both in cash and in kind. So if those items have fallen, you may become eligible. Businesses actually, although it talks about in keeping employment, it includes sole traders now. Trusts, partners are all included in Jobkeeper. How to access? This is the interesting one. And where it's been developing. For those of you who haven't, you should have registered your interest with the ATO. Go onto the ATO website, and there's a button there called Register My Interest in Jobkeeper, and that will tag you and your business for the updates that the ATO is issuing. Now, as of today, the ATO started sending out to interested parties a link to a web page, which is about 28 pages long of detail in terms of the actual Jobkeeper program. And within that 28 pages, there is additional links to additional pages. But the long and the short of it is that they are now triggering the details for eligibility. What you need to be doing is creating proof of the downturn in your business. That's keeping your accounting records up to date. The application for the eligibility for April is a very tight window. It only runs at the moment, and I believe, given this short time frame and the ATO's tendency to crash, but at the moment it only has a 10-day window between the 20th of April and the 30th of April for you to apply for your eligibility for April Jobkeeper Payments. This is done largely through MyGov ID. We can do it for you, but we are supporting our clients in getting their MyGov ID set up so that they can do their own registrations. We're in a position where we love to help you, but we're going to be inundated, as you can imagine, if every employer that we work with in that window needs us to lodge all their forms.
Yeah, I think Steve, I think that it's fair to say that the MyGov registrations involve proof of ID and other documentation that our clients will have those readily to hand, and so it can be more efficient for you to do that in your own environment as opposed to coming through us to get that material done, because that will just delay the process and be probably less efficient than otherwise would be. If you do get stuck, then please pick the phone up, talk to us, get an email through to us quickly. We have sent an email to all of our clients today with that process. For those that haven't registered for MyGov, that would be the number one thing I would put on your to-do list right now, is to make sure that you are registered for MyGov, and we'll get on top of that so then we can help you, because the subsidy payments that will occur subsequent down the road, which Steve's about to go through, will be largely dependent upon that communication piece, MyGov, being established in the first place, unless you want us to hold your hands through that process. Now, Steve, we've got a couple of questions which relate to, I think you've already covered one from Vanessa. Well, one that says here, can you claim JobKeeper if your partnership has no employees but you have no funds to continue to pay yourself?
This is a strange one, and it also applies to trusts where there's no actual employees and the members of the family involved in the trust have drawn trust distributions. One partner in the partnership and only one beneficiary of the trust is eligible for a JobKeeper payment. Why they've nominated that, I can't answer you, but that is what the ATO has come down with.
So in reality, it would be prudent under that circumstance for that individual to find the proceeds, whatever we needed to do to make that happen. Talk to your accountant, see what strategies you can come in place to keep you going, because while you're paying that payment, then the government subsidy will flow through. Yep. JobKeeper money will flow through. There's another question here from David, who says that does the JobKeeper allowance apply to businesses shut down due to lack of business? Okay,
it applies where the business is operational and active as at the 1st of March. Now, an active business is defined by the ATO in their documentation. I'll just read this as including businesses which have effectively been terminated under federal government announcements, and the examples are obviously clubs, galleries, cafes, personal services businesses, and the like. So the answer is yes, under those circumstances. If you would have shut down before the 1st of March, then you probably wouldn't qualify.
Yeah, and one other question, which I think is going to be symptomatic of a lot of our people that are listening in there at the moment. It's from Troy. G'day, boys. I like being called a boy, it's a good thing. Been a long time since I was a boy, but thanks, Troy. I've lost approximately 8 months' worth of work, but contracts for those projects were yet to be signed. Also won't reflect on my turnover until later this year. How do I prove loss of work? Will emails from clients suffice?
I can't answer that one in terms of emails to clients. The turnover issue is one where you may have to register down the track. If what I've heard is correct, then at the moment you haven't got your 30% downturn, but you're anticipating it later in the piece. If that's the case, then you may have to register from July, June, whenever that...
Yeah, there'll be an ongoing process for this, so not everyone's going to immediately be able to qualify for this, but there will be the opportunity to register in later months if those downturns do come through, and the ATO is expecting some monthly paperwork each month to verify that people are still basically able to claim or are able or looking to claim in that particular month. They're still employing that staff. So, Troy, any further questions? If you're not already working with one of us, great opportunity to sit down one-on-one and discuss some of the strategies that may be applicable for your own personal circumstances.
Okay, one of the things that you need to get on with fairly quickly, and we've just lost, there we go, we've just lost our screen, and it is linked within the document that the ATO is forwarding out to the people who've registered their interest, is that your employees need to elect or confirm with you that they are eligible employees. That is a signed declaration that each firm has to get from every employee that they're claiming JobKeeper from. Get onto that straight away as well, because you can be guaranteed that somebody will lose the email, put it to the side, do whatever, and you need to, as an employer, be chasing up your employees to get this documentation in place. Without a signed acknowledgement of eligibility, you are not able to claim for that employee.
Excellent. Now, we talked about some case studies, Steve, and these were based upon some practical circumstances where people have actually implemented strategies to perhaps adapt and improve their circumstances in certain cases about the JobKeeper payments. Steve, this was a live example of one of your clients.
Yes.
Talk us through what actually happens and how it works.
This is a friend of mine, and Mr. Jones is actually attending the webinar tonight. So hello, Mr. Jones. You know who you are because names have been changed for confidentiality purposes. But Mr. Jones and his wife are employed by their family company, which we'll call Jones Co, on a part-time basis. They're currently drawing a gross salary of $1,500 per month each. They have been drawing that for several years. Under the scenario we're talking about, revenue for Jones Co is going to drop by 30% or more. The strategy that Mr. Jones implemented, and we worked with him, is he sought professional advice. He registered his interest in the Jobkeeper Stimulus with the ATO. And between the 20th and 30th of April, he's going to enrol for that payment. On the 4th of May, this is another date that's come out in the announcements of yesterday. The form won't be available prior to the 4th of May, which is why that date is in there. On the 4th of May, he is going to confirm with the ATO his eligible employees for the April period. From that period, from that point on, he'll be able to get the $1,500 per fortnight payment. Now, within Mr. Jones's scenario, with the advice we gave him, he actually did something which appears to be counterintuitive initially. I advised him to increase his salary from $1,500 a month to $1,500 a fortnight, or slightly over $6,000 per month between the two employees. So the company will be eligible for the full subsidy of wages paid. If he hadn't increased his salary, he wouldn't have been eligible for any JobKeeper. JobKeeper relies on a minimum payment being made of $1,500 a month, a fortnight per employee. If you choose not to pay your employees that full $1,500, they are not eligible employees for the subsidy.
Yeah, no, we've had a couple of questions, Steve, which I've dealt with and typed the answers to, very badly typed, but nonetheless typed the answer. Employees include directors of the businesses in terms of the JobKeeper. So if you're a director, you are an employee and entitled to the same support, which is what Steve shows in this particular example.
Mm-hmm. That's right. Now, Mr. Jones and his wife, having increased their salary, now receive $3,000 a fortnight in arrears, but effectively a fortnight, from the government for up to 6 months. So that's approximately $36,000. Because of the fortnight, I think it might be slightly higher than that, but they're going to achieve a cash flow from the government of $36,000, which is going to pay them double the wages they would have otherwise drawn for the 6-month period that Jobkeeper is involved with. Jobkeeper is once you qualify, you're in for the remainder of the period. That's a very important thing to remember, providing, of course, you keep the employees.
And that's the key benefit. So whatever you continue to employ these people, once you've qualified and you've met the 30% rules, then effectively you will keep getting Jobkeeper. And the other thing that's been based upon Jobkeeper is earlier last week there were some changes that were announced to the federal awards, which deal with the Jobkeeper stimulus packages and what you can and can't do in terms of standing down and changing hours for employees and the protocols that need to be gone through. It's very important that all of that, if you recognise that the changes to the HR laws and to the awards are dependent upon people receiving these Jobkeeper strategies. If you don't meet those Jobkeeper strategies, if you're not meeting the Jobkeeper payments, then effectively the awards and the employment conditions of the Fair Work Act and the relevant awards will stay on foot. So there's no changes unless you're meeting Jobkeeper. So it's very, very important that you're clear about whether you meet the criteria or otherwise, and you work with your advisors to make sure that you're actually are in fact capable of being qualifying for these stimulus packages.
There's quite a few of the aspects of the various stimulus packages which are dependent on Jobkeeper's eligibility.
Okay, excellent. So one question from Chris, one Chris you know well. What is if you qualify and later your turnover is less than 30%? Do you advise and stop receiving the payments?
No, this is what I was saying just a minute ago, is that you once in, all in. So you can have a scenario where you qualified for Jobkeeper and then your turnover picks up. You know, the perfect world scenario, you qualify in April, your turnover's dropped, and in early May, the vaccine that we're all looking for is created. By the end of June, COVID-19 is eliminated and the world starts to get back on its feet. Your turnover increases unless there are rules associated with the change in Jobkeeper, and the Treasurer does have a large degree of discretion in this regard. You would be eligible for Jobkeeper for the full term from the time that you first qualified. I should just, before we get onto the slide that's on the screen, I should just make another comment in terms of the overall position of Jobkeeper. Last week, for those who were with us, I made the comment that at the time of recording, we were waiting for federal Parliament to approve the Jobkeeper package, and we were waiting for the fine print on the legislation. The legislation actually, whilst it approved Jobkeeper in broad terms, essentially punts the whole
to the regs.
Situation to the regs. Josh Frydenberg basically is being given wide discretions to determine how Jobkeeper is to apply. Not only that, he's then flicks wide discretions to the ATO in terms of these things. So if a scenario hasn't been contemplated as yet, and there are obviously thousands of those with every individual circumstance, there are discretions within there to be dealt with that. Excellent.
Thanks, Steve. Answered some questions in that space, so it's excellent. Tenancy, now, this has been a very, very contentious area, and we've had some announcements in more recent times about how the position of tenants and how the position of landlords and what the obligations are for each of these relevant parties. We've also had some announcements that have occurred in New South Wales, in particular, with what they're proposing with private residential tenancies as opposed to commercial tenancies. It remains a vexed issue. Effectively, there is a lot of angst that's occurring out there in this area. So, Steve, let's have a chat about where things are actually standing at present with what we know.
Okay, I'm primarily going to talk about the commercial tenancy situation here because there are some, well, sorry, I'll start that again. The scope of this whole package, as I said at the start, is just too wide to address everything. If you're a residential landlord, then by all means have a discussion with us after, and we'll certainly aim to address your questions. But in terms of the commercial legislation, once again, we have a national code of conduct, and surprise, surprise, it's dependent on eligibility for Jobkeeper. When I said earlier that Jobkeeper is the catalyst for a lot of these stimulus measures, you can see this when you get into this one. Okay, so commercial tenancy, what they are proposed, sorry, it's not proposed, it's the National Code of Conduct, which has been approved by National Cabinet, and various states are implementing the regulations necessary, because tenancy law is actually state law, and we're trying to get a federal code going. So there's a bit of conflict there. The federal code says that there can be a scenario where a landlord has to provide up to 50% in rental waivers and up to 50% in deferred rental. That's a worst case scenario, but I'll talk through a couple of examples in a minute. This applies to, as I said, commercial tenants who qualify for Jobkeeper. How to access it? This is one where the government has pretty much punted it back to the landlords and the tenants. They have to negotiate in good faith, but within the terms of the National Code. So the drop, once you qualify for Jobkeeper, of 30%, if it's more than 30%, whatever your percentage of turnover drop is, that's the point at which you can negotiate, determines the extent to your drop in rental charge.
Yeah, so if the clause is dependent upon the JobKeeper strategy, that would underpin a 30% decrease for businesses that aren't charities, 15% conceivably for charities. And basically it's forcing landlords to the table to forego rent to a certain extent.
Yep, absolutely.
I was speaking to a agent, a Sydney agent there today, who's basically spending a significant amount of his time negotiating between tenants and landlords in respect of existing leases. And his comment was that, I can't say it in this open seminar exactly what his view was at this legislation in respect of landlords, but there wasn't a lot of support for landlords in this legislation. It's more targeted at the tenant, and I believe that, as that slide says, there's some discounts available for land tax and the like, but in reality, this is more about support for tenants.
Yeah, and I mean the comment about land tax, and I just go on to that one. The New South Wales government, land tax again is a state thing, so I'm referring here to New South Wales. I haven't looked at all the states, but New South Wales has come out and said that where a landlord passes on savings, including land tax, to the tenants, they will get a 25% reduction in their annual liability for this year, and additionally a 3-month deferral in terms of payment on the remainder.
Yeah, so we've had a practical case which you've worked through, Steve. Do you want to talk us through that? Okay,
retail shop. It operates in a large shopping centre. It's paying $10,000 a month. Now, this is a flat rent. It's not a turnover-based rent, because that's a little bit harder to explain in a quick overview. The revenue of retail shop has dropped by half, and therefore they qualify for Jobkeeper. It's well above that 30%. Their strategy, they've got to ensure that their financial records remain up to date, and then negotiate with the landlord in good faith based on the turnover fall. One of the questions that I've had quite regularly is, does that mean that I have to, from a tenant's perspective, provide my landlord with financial information, and from a landlord's perspective, can I demand that financial information? And the answer is essentially yes. The code has 14 points within it that address that sort of thing, and that is one of the points. Now, in terms of this particular scenario where retail shop has had a 50% drop in their revenue. As a result of that, their rental payments, I'll stress payments here, we'll get into that in a second, their rental payments under the code dropped by a minimum of 50%. So the result for the tenant is that they will receive, and I've just noticed this slide is actually incorrect. The result should say 2.5 per month is waived and 2.5 per month is deferred. They get 50% of the 10,000 is still required to be paid.
But $5,000 is remitted in full.
$5,000 is, $2,500 is waived, and $2,500 is deferred to be repaid over a 24-month period.
Yeah.
So for those of you who are looking at the slide where it says results, those two numbers should be 2,500 and 2,500. The tenant still has to pay the landlord $5,000 now. The landlord cops a loss which they cannot recover of $2,500, and the tenant, after we get out of this pandemic period, over a period of at least 24 months, is required to pay the landlord the other $2,500.
Yeah, Steve, I've got a fair few questions here, which we will try and deal with as quickly as we can. One from Casey. We have a gym been closed, 100% decrease in revenue. We don't have employees. All the trainers were contractors, so they don't qualify as job keepers per se. So does this mean we have to pay full rent? The answer would be no, because effectively, Casey, she would still be an employee herself at the very least, so you would still satisfy. I would suggest having a chat to us and we can deal with that, but gyms are a classic basically negotiation with the landlord because they fit within this criteria. Wendy, if we don't qualify for JobKeeper payments, are we liable for normal rent conditions of our lease?
The legal answer is yes. The practical answer is talk to your landlord.
Yeah, and I think that's we've been doing a lot of assistance with clients at present, liaising with landlords, providing accurate numbers, providing financial information so landlords are able to assess where things are at. We've also been working with a lot of small business landlords who basically rely upon their rents to feed and clothe their families. So they're in a vexed position as well too. So it is one where really I can see both sides of the fence, but reality as the politicians, particularly Scott Morrison, suggested that basically people have to act in good faith and negotiate in good faith. It's in both the tenants and landlords' best interest that they come to a solution and come to a strategy that works for both of them, because if you're a landlord, it's going to be very hard to find tenants in this environment. And if you're a tenant, well, effectively, it's pretty hard to keep paying the landlord his rent if effectively you've been forced to close. So there has got to be a long-term strategy. So that maybe now's the time to be considering what you are doing when this recovers and ways that you can work constructively with your landlord after this crisis is over, because it will finish. It will come to an end, and then you'll still be with that landlord that you need to work with for however many years that your lease has left to run. So
JobKeeper is the catalyst for enforcing the national code, but everybody's trying to be practical at the moment, and negotiation is the way to go.
Yeah, and Wendy's also added, forgot to add, if we close our doors due to government, we had to close our doors due to government restrictions on our business. Clearly that's going to fit that criteria. So
you've got a 100% drop in revenue, providing you can qualify for JobKeeper in one form or another. You have a 100% cash saving immediately. 50% of that is waived, and 50% of it will be under a deferred repayment plan.
Again, I remind you, you've got the opportunity to sit down one-on-one and flag some of these questions if you have further issues in this rental space. It's one of those tough conversations that lots of people are having with their landlords at present. So we are here to help, and we can help you land the best result you can. Wage subsidies for apprentices and trainees. Now, this was one of the more straightforward things, Steve.
It is, although there is interaction with Jobkeeper. Okay, this one was announced very early in the piece, and essentially it's the government will provide a subsidy of up to $7,000 per quarter per apprentice or trainee, representing 50% of that trainee's wage. Now, this is applicable for businesses who employ less than 20 staff, including employees and trainees, apprentices and trainees. And generally, it will be a case of the organisations with eligible trainees should have been contacted by industry.gov.au. If you haven't, contact the apprenticeship support network provider that you've been using. The interaction that occurs in terms of Jobkeeper is you can't get both. So some people are going to have to do a little bit of a mathematical calculation and say, am I better off getting the $1,500 Jobkeeper per fortnight, paying the apprentice a higher wage, or am I better off getting the 50% wage subsidy? Now, in terms of the Department of Education and Training, they put out a fact sheet, which I only found this morning. I don't know how long it's been out. It does say that you are able to, if you are currently receiving this subsidy, turn it off and convert to Jobkeeper if you want to. But
so that's again another situation where you can sit down, analyse your circumstance and switch if necessary.
Absolutely.
Awesome. Thanks, Steve. Payroll tax. Detest this tax. Goes against everything as as a country we should be doing. But there has been some relief. Unfortunately, they've still got it. But Steve, where do we sit with payroll tax? Okay,
payroll tax is a state tax. So I'm only going to address New South Wales here. All the other states have their own plans, and pretty much as I understand it, everybody has implemented a plan in relation to the current financial crisis. Payroll tax is applied in New South Wales for businesses with Australian wages of exceeding 900,000. And this particular stimulus caps out at wages of 10 million. What it is that if you are within that range of 900,000 to 10 million for Australian wages, the New South Wales Department of Revenue will give you a 25% discount on your annual calculated payroll tax liability. How you access that is to basically ignore March, April and May in terms of lodgements. They don't require a lodgement. They don't require you to do your calculations online, but they will do the 25% annual discount calculation on the June annual reconciliation, which you do in July. If you haven't achieved the full 25% discount, in fact, you've paid too much, you get a refund after that calculation is made, or alternatively, worst case scenario, you get a bill. For businesses with higher wages than $10 million, there's still the option of deferring payments. You can push them out for basically 6 months.
Yeah, so New South Wales are giving a 25% discount. Chris, one of our attendees tonight, has already suggested it, or has already let us know that Victorian payroll tax has already been refunded, that every payroll tax he's paid this year. So it's not often that Victoria is ahead of the New South Welshman, but effectively it looks like they're ahead of the game in this one. Chris, thank you for your comments. Badge discounts. Now, these are absolute permanent benefits that, again, one, if you like, of the free money that's available to help support relevant businesses who were in the payroll tax or the GST net not payroll tax, with employees rather, on the 12th of March. This is extraordinarily complex, this measure, difficult to understand, so I'm really pleased that it's not me that's got to explain it, it's Steve. So Steve, why don't you give us a heads up?
Thanks for such a build up and building up the expectations. It is probably the most confusing aspect of the stimulus package. There's been all these announcements about a $100,000 cash refund available to businesses. It's not necessarily a cash refund. It is a credit to your BAS liability. We'll get into that in a bit of more detail in a minute, but It's available for employers with an aggregated turnover of less than $50 million. Now, aggregated basically means if you're not part of a group, multiple companies, common control, those sort of things, you will be entitled to this when you lodge starting with your March activity statement. You have to have been an active employer as at the 12th of March, so there's no post 12th of March setting up a company and employing all your family members to try and access this. It is only for people that already have a history. As soon as the announcement was made, that cutoff was also made. It's an automatic calculation on lodgement of the business activity or instalment activity statement. And I know David's got one of the questions that was lodged earlier by attendees that we'll get to in a second. And it applies from now until the September activity statement. So it's split into two stages, and this is the confusing bit. Stage one is a calculation, and stage two is basically a repeat of stage one, for want of a better explanation. So in stage one, you can get a PAYG credit, PAYG withholding credit to your integrated client account or your BAS account based on the amounts of PAYG that have been withheld as disclosed in the March through to June activity statements. Now this is capped out at 50,000 in stage one, and 10,000 is the minimum that any employer will receive in stage one. Yeah,
so if you're registered and you had any employee, the minimum you could get in that first stage is effectively $10,000.
Okay, so for monthly payers, the initial credit will be the greater of 10,000 or 3 times the PAYG liability on your March activity statement. You don't have to worry about January and February. That is irrelevant for monthly payers. It's just 3 times March. Now that's capped out, as I said, at 50. If you don't get to the 50, then you will have an additional credit potentially on your April, May and June activity statements until you reach that point of capping out at 50. For quarterly payers, the initial credit that you will get is equal to the amount of PAYG that was held on your March activity statement. And if that's less than 10,000 either way, you'll be eligible for a 10,000 credit. If your subsequent BAS, which would be your June BAS, takes your total PAYG withheld over the 10,000 amount in aggregate, then you will get the additional amount of difference between what you've actually paid to your employee or to the ATO on behalf of your employees, the amount you've withheld, and the 10,000. That is stage one. Stage two is, and this is all subject to the fact that you have to remain an active employer. Now, active employer, we'll go back to the definitions again for Jobkeeper. You have to have the employees on the payroll, you have to be paying them, but the calculation for stage two is based on the numbers in stage one. So if a monthly payer had capped out their 50,000 in stage one, they will get an amount equal to 1/4 of the 50,000 in their June, July, August and September activity statements. The June one is a bit of a strange one because it overlaps between stage one and stage two in some cases. The monthly payers, they will get 1/2 of their stage one payment credited in their June activity statement, which will be calculated from their March and June activity statements, plus 1/2 of their liability will be credited onto their activity statement. Sorry, their September activity statement. Now, as I said, this is not actually a cash refund. It can be, but won't necessarily. It's initially a credit to your BAS liability. And the question that has been raised is I've already lodged my March activity statement, but I've read somewhere that the ATO is not crediting these amounts until the 28th of April. Have I essentially lost this credit? The answer is no. The ATO just hasn't got their systems in place as yet to give you that credit. So when the systems are in place and they're trying, the due date is the 28th or 29th of this month, at that point the credit will be raised. If you have a liability on your instalment activity statement, which can be raised for things like a GST liability, the credit will be offset against what is owing before any refund is issued. If you still end up with a credit balance on your account after all liabilities have been extinguished, then the ATO is scheduled to issue a refund. The statement that the ATO has said is within 14 days, but I don't know whether that's 14 days from the date of lodgement of the subsequent activity statements or 14 days from the 28th of April.
So Steve, there'll be a lot of businesses out there that have been forced to close their doors. So if they were trading in March, they'd have that credit come through. There'd be still potentially employees that were on leave or you're maintaining the JobKeeper strategies in the June period. They may well end up with cash refunds in the subsequent periods because their credits will be offset or will be larger than their obligations that they're accruing.
Absolutely.
Yeah, so again, this is a cash flow timing issue, but it is a permanent benefit. You are reducing the liability that you actually owe to the ATO, and the ATO will not be coming back and knocking on the door and asking you to repay this at some future time. So it is a real refund. I think we've got a case study which we
before the case study, I'll just make another point. This money, this credit is actually tax-free income to you. To the ATO, when you lodge your tax return, is not including these amounts in your taxable income for future years or this year.
Excellent. Let's jump into the case study. Again, this extends from where we started previously. So same facts with Mr. and Mrs. Jones, but this takes it to the next step. Okay,
so yes, the facts are the same. And this is again the real life scenario. They proactively manage their BAS reporting, which basically what I'm saying there is that they've got their records up to date, they're lodging as fast as they can. On lodgement of their March BAS, they'll disclose their normal wages. Now, that in this scenario, they were earning $1,500 a month each, and for March that was probably still the case. In subsequent months, they may increase their amount because of the JobKeeper subsidy that we're getting from the earlier example. Okay, so what will happen for Mr. and Mrs. Jones? On lodgement of their March BAS, they will receive a tax-free credit of $10,000. Now, in the scenario that they are in, at $1,500 a month, or effectively, what's that, less than $375 a week, they weren't having to withhold any PAYG. Despite the fact that they were not having to withhold any PAYG, the minimum credit that is being obtained on this BAS incentive is $10,000. So they've got a scenario where over the 3-month period, they've paid wages, gross wages of $9,000, January, February, March. That's what they're lodging on their BAS. They will obtain a $10,000 tax-free credit. In addition to that, on lodgement of their June and September BASs, assuming that they don't ever go above the 10,000 threshold I talked about previously, they will receive an additional $5,000 credit in each of those quarters. That credit will, as I said, be offset against any other liability in the BAS, such as GST. If the net credit is a credit, if the net balance is a credit, the ATO actually owes them money, then the cheque will be in the mail.
Excellent. So how did that finish up?
Mr. and Mrs. Jones ended up quite well off, in inverted commas, under this scenario. I mean, I'm sure that every one of us, including Mr. and Mrs. Jones, would prefer that they weren't. The world wasn't the place that generated this. Nonetheless, under the scenarios that we talked about, they will receive $1,500 a fortnight for up to 6 months, or approximately $36,000 of JobKeeper supplement from the tax office. In addition to that, they'll get a BAS discount, $10,000 on March, $5,000 on each of June and September, totaling $20,000. If the company remains eligible for the full period. In other words, if they chose to not employ themselves, then the BAS credits cease. And so would the PAYG JobKeeper. But if they remain eligible, the total amount of support they will receive over the 6-month period is approximately $56,000.
Yeah, so key strategies to consider there is making sure that you're maintaining employment, make sure you're maintaining employees, and holding together cash flow as best as you possibly can to make sure that you are and they're able to benefit, potentially in this case, $56,000. So key to undertaking all of this, and Steve's already flagged it earlier, is the registrations that are required and the communication with the ATO. Now, with single touch payroll systems and with the new registrations with MyGov, it's absolutely critical that businesses are actually maintaining their accounting systems. And it may be an appropriate time to consider perhaps some of this stimulus money, and if you haven't got a good accounting system that's helping you keep track of all your reporting obligations, helping you make better decisions, now would be a really good time to consider an investment in that space, because effectively you are going to need it to monitor and report the obligations with the ATO, because if you're not up to date, the stimulus money will stop. And in certain cases won't even start if you're not making sure that you're up to date with what you need to be. So now's a great time to look at cloud-based solutions that allow you to work constructively with your advisors to make sure that you can get the right result and implement the right strategies. So, Steve, in addition to some of the strategies that we've just covered off with the BAS refunds, Tax Office or the government's allowed some tax write-offs. Why don't you give us the quick update on where they sit?
Okay, this was one of the earlier initiatives put in place because at that stage the first initiative was only 10 days earlier than the second, but at that stage the government was hoping that it would, to a large extent, be able to keep businesses operating in a broad fashion and operating profitably. So, as an incentive, it increased instant asset write-off for plant and equipment from $30,000 this year to $150,000 this year. Businesses with an aggregated turnover of less than 500 million, which is up from 50, are eligible to claim this. Now, the process essentially in terms of access is to purchase a new or second-hand piece of plant and equipment costing less than $150,000, which is installed and ready for use prior to 30th of June. The one exception to that is cars. Also, when we're talking about plant and equipment, that is not building construction costs. That is a deduction that's outright that will be claimed in your June 2020 tax return. That's good if you had the good trading for the first 9 months of the year and you're still expecting a tax liability. That may be a way of writing it off. Of course, to be able to do that, you've got to either be able to fund the purchase or arrange for finance.
Yeah, so key to these stimulus measures, Steve, is if I'm accurate, is to make sure that it's ready in place by 30 June.
For the
$150,000 write-off. So effectively, we have seen strategies for certain clients who are undertaking plant fit-outs, upgrading machinery, upgrading their production lines to make sure that they qualify for this. In certain cases, we've had cranes, we've had motor vehicles purchased, we've had trucks and other issues that the purchases have been budgeted to occur now because of this stimulus. And then it does cover second-hand goods. It's not just new goods.
That's correct.
So that's slightly different from what we're facing with the depreciation changes post 30 June.
Yes, post 30 June, your instant asset write-off currently drops from $150,000 to $1,000. So if you're looking at buying a large piece of plant and equipment, you're better off buying it and having it installed before the 30th of June. For plant and equipment that is over $150,000 this financial year or over $1,000 from the 1st of July, the depreciation of those assets has been increased so that you will get a 50% write-off in the first year of acquisition, and then the balance, the 50% that remains on the cost base, will be depreciated under the existing depreciation rules. That applies again to businesses with an aggregated turnover of less than $500 million. The difference with this one is that it doesn't apply to second-hand assets. Now, the $1,000 thing, every year the government has, during the budget, basically said that the instant asset write-off will be extended for a period of time, and progressively they've increased it. However, the figure that is hardwired into the legislation is the $1,000. Where we have a problem is that under normal circumstances, we'd have a budget in May. We'd expect the government to increase that threshold and it'd just be as things are. However, there's no budget until October this year, and even if the government did this through legislation prior to the budget announcements, they're not back until the 27th of August. And I can't imagine that instant asset write-offs are going to be the first thing on their agenda. So we have a situation of, from the 1st of July, probably until budget night, you take a risk if you spend more than $1,000.
I'd find it staggering if they didn't actually implement this, but Steve's point is absolutely valid. So if you've got equipment and expenditure, look to get that done the 30th of June, prior to 30th of June, because you'll have certainty. If it pushes over to the next year, then we'll just need to be cautious with our planning and strategies in that space.
Okay. This also only applies to new plant equipment as opposed to new and second hand with the previous option. And this applies to assets which are acquired after the announcement date, which was the 12th of March, and first used and installed by the 30th of June 2021.
Yeah, good. So I think a couple of quick questions. I do want to, I'm very conscious of time. We're getting close to our scheduled close. Pete mentioned the 10K credits for the BAS refunds, whether you need to qualify for Jobkeeper to get those. And the answer is no, they'll be available to, it's not dependent on being Jobkeeper compliant. So that's anyone that's employing businesses effectively will get that minimum benefit. And I've had a couple of questions from Patrick and also Paul about whether tonight's presentation is recorded. Again, those who have registered will have the opportunity to receive a recording of tonight's presentation. Again, for those that aren't already working with us, you'll also have the opportunity to book a discovery, and our team will be out having a chat to you about that to see what time suits you to sit down and discuss these matters. But the recording will also be available on our website to download. So if you haven't already been looking at our website, there's a history there of all the announcements as they're made. We're communicating with our clients, so we are putting those up there constantly. So, fee waivers, Steve, we've had some changes in that space.
Okay, fee waivers is one of those ones where essentially you have to talk to the organisations that are supplying you with generally intangible things such as rates, bank fees, insurance policies. Some of them are discounts, some of them are deferrals, state and local taxes, some bank fees. At least 4 of the large insurers have said they'll put a 6-month moratorium on business policies. National Cabinet has approved hardship provisions for energy, water and rates. Now, hardship provisions appear to only be a deferral at this stage. But again, hardship provisions, you automatically qualify if you qualify for Jobkeeper. So a lot of this legislation is all written around the government's aim to keep Australia employed. The discounts they apply for businesses generally impacted by COVID-19, but as I said, some apply automatically. For not-for-profits and charities, the ACNC has pretty much put a hold on their operations, so there are things that don't need to be lodged, and you can defer annual general meetings and that sort of thing. If you go to their website, I haven't played this one, but there is a webinar, recording of a webinar called Charities, the ACNC and COVID-19. If you're an operator of a charity, I suggest that's probably a good place to start. Community packages in general, look at your local council site. Yeah,
there's changes happening quite often. The state government continually are updating different changes as well too. So again, opportunity to apply personally for your own circumstances by sitting one-on-one with one of our team. Interest rate deferrals, been a lot of information about this in the press. We haven't got a great deal of detail. I have got some information, but I'll let you give the team a bit of an update first, Steve.
Okay, so I guess the update is that the first round of offers of funding, this is item 2, of the federal government money to support a $250,000 unsecured loan with a 6-month payment deferral on a 3-year term was made last week to, I think it was around about 50 financial institutions, including the Big Four. So they may have been fobbing people off waiting for this money to come through. The funding offers there, they know what they're able to offer now. So that may get things moving. That is really the update in terms of interest rates and options. The general rules that have been thrown in place from very early in the piece are that talk to your bank about getting a 6-month deferral on existing loan repayments. That can be interest-only loans and principal and interest loans. Have your financials up to date so that you can have a discussion with them, show them that you're being impacted.
Yeah, I've got some information that came to us working with some clients here at the moment who are national bank customers, which we had information just today. Their packages and the information that's been conveyed to us is the packages are offering interest-only finance available for periods of up to 6 months, 4.5% interest rates, P&I payments over the next 2.5 years after that. But the key components is the bank are going to be looking to know exactly what you are looking to spend that money on, and it's going to need to be supported by cash flows and effectively business information that you will need your advisor's help with. So if you're in the position to actually look for some of this finance, if there's an opportunity that you can capitalise on some of this unsecured finance, then now is the absolute time where you need to make sure that your accounting records and things are up to date, and you're talking to us to make sure that your shirt tails are tucked in and you've got a business plan that will allow you to get finance for specific purposes from the bank approved.
Absolutely. And the banks aren't going to be stupid in handing this money out, but bear in mind that the federal government is guaranteeing 50% of these loans to the banks, so if there was a default. Yeah,
they're asking for specific purpose. So to ask them for cash flow may be required, but they're going to be looking for cash flows and strategies as to what happens at the back end. So now's really the time to do your business planning if you're looking to tap into some of this unsecured finance. New South Wales State Government grant, Steve.
Okay. This one is a grant that was announced by Dominic Perrottet and the Premier a couple of weeks ago. We haven't seen anything yet in terms of applications. If you see at the bottom of the slide there, the application should be on the Service New South Wales website by Friday. Watch this space. Who's it for? It's for small businesses having a staff membership of between 1 and 19 and a turnover of more than 75,000 who have been highly impacted by COVID-19. Read into that, Jobkeeper.
Yeah, and the 75,000 threshold means effectively they're required to be registered for GST. So in reality, it's likely that again, it's going to make sure that you need to be up to date with your systems. Key component of this and what the state government's looking for is basically for small business to get advice because they understand that these rules are difficult, they're hard to understand. In certain cases, there's different criteria for different components. And what they're trying to do is help facilitate a grant to help small businesses get advice to best utilise or to enable them to be in a better position. So this is one that will be able to be used by potentially a lot of small business to help work with the likes of us and other key advisors to enable them to get set for what they need to dealing with this crisis.
The stated purposes that were issued in terms of the press release that came out by the Premier is that this money needs to be used for funding unavoidable costs such as utilities, overheads, legal costs and financial advice.
Yeah, and now's the time for financial advice, if ever there was a time for financial advice. So we've been working through 10 key strategies with our clients at present. And those strategies are on the particular slide. I'm very conscious of time tonight and I don't want to keep people too long away from their dinners and their lives. So I won't go through all of them, but other than say that basically we do have 10 separate strategies. Consider what we've covered off on earlier tonight there and how they can be applied to your own circumstances. Jot down those key points and basically remember you will have the opportunity to nominate a time to sit down one-on-one, at least virtually, with our team or one of our team members to see how basically these stimulus measures and our strategies can help provide a sounder foundation for you to get through this particular crisis. Again, as I've already reiterated, the presentations tonight will be available to those to replay. I recommend to all and sundry that you regularly look at our website. You'll see a What's New tab, which will be updated regularly with announcements and other information that we that as we hear from the horse's mouth, so to speak. We did write to all of our clients today, just making sure that they are getting their MyGov registered. So when you see those emails hit your inbox, please open them up because they're full of information. We're trying to keep them as concise and practical as we can, but in reality, that's the way that we can effectively pass on information to you in an efficient way, other than sitting down one-on-one with us, which again is what you have the opportunity following tonight's presentation. Wouldn't be an accountant's presentation without an appropriate disclaimer. Again, we've talked about general circumstances. We've had many questions tonight. I'm sure there'll be many more questions that you'll have following tonight's presentation as more detail comes to light from these announcements. But we do offer you the opportunity to sit down and apply these circumstances to your own personal issues. So I don't have any unanswered questions on here other than potentially one question that was submitted to us by Justin previously. And Justin did ask us if we've had someone on maternity leave since July 2019, not receiving anything since February 2020 due to finishing, but the employee wants to take more time off, will they still be eligible for Jobkeeper payments?
Okay, well, if the employee is strictly still on the books and is just taking unpaid leave, as soon as they start receiving the $1,500 a fortnight, again, they will be eligible.
Excellent. So tonight we've run slightly over about 10 minutes, which I did flag, but I knew we'd have a lot more questions in the JobKeeper side of things tonight. So I appreciate your patience in us taking another 10 minutes of your time. I personally would like to thank Steve again. Steve, thank you very much for what you've been doing, not only for us, but more importantly for our clients. It's been a Herculean task to stay on track with all of this data and pronouncements as they come up and getting through the detail, and he's done a magnificent job in that space. So thanks again, Sarah and our support team, Gil, for our webinar. Thank you for your efforts. Again, I also suggest that to give yourselves all a pat in the back. tough time out there at present, and taking the opportunity and taking some of your own personal time to sit down and absorb these potential strategies and what's actually available out there to help employ and continue to employ businesses is noble, and I thank you for taking the time to do just that. So on behalf of Viceco, thank you very much for your presence tonight, and please stay safe.
Thank you.